Look, you put silver at 5,000, like Goldman says, and divide it by, it's not. I mean, triple-digit silver is something one could expect at some point. And then when you realize that the government reclassified silver now as a critical element, a critical mineral, they've put a floor under the price of silver.
Right now, gold and silver are standing at one of the most critical moments in history, and almost nobody is ready for what comes next. Will prices explode higher? Will they crash lower? Or are we about to witness a move so big it changes everything investors thought they knew? Andy Schectman, CEO of Miles Franklin, has been warning about this moment for years, and in his latest update, he reveals exactly what you should be doing right now with your gold and silver. And here's the catch. The most important part of his message comes at the very end. That's where Andy drops the truth every investor needs to hear. So don't even think about clicking away, because this could be the video that saves your portfolio.
No, I just think that we are entering that phase right now. Usually I go back to my career, and Labor Day is usually that moment where things start to change, and we're here. And I think we're in an environment where everything seems to have accelerated. Just life has accelerated. Craziness has accelerated. And I think this is going to continue. I think that we are at that point on the curve where things are going to start to not only get crazy, but get magnified. And when you realize that all of this move that we've had, where silver has outpaced Bitcoin, silver and gold are roaring and no one knows about it. You get the public involved, and the biggest issue people will have, which has been a non-issue for over a year now, a year and a half, that's all I've talked about, is how crazy the availability is and premiums being so low. You're starting to see premiums creep. You're starting to see more people, bigger money start to come in. All it will take is one event, and this market, which has been characterized by over availability and low premiums like that, will change. And you've seen it with your own eyes over the last 5-6 years that we've been working together closely. Granted, that was somewhat related to the pandemic, but I would say look at Silicon Valley Bank as a better example, where Miles Franklin added 14,000 clients in 45 days, where we were working, yourself included, till 10, 11, 12 o'clock at night and just had to stop in order to eat dinner and rest for a little bit. As crazy as that sounds, it's true. And that's the kind of, I think, demand we will see when people realize that, the stocks that they own are at all-time highs and the insiders are leaving, that the bonds that they own are losing demand globally. And I would not be surprised one bit to see bonds be a 4-letter word. Well, it is B-O-N-D, but a real nasty 4-letter word by the time it's all said and done. And I don't know. I just think it's time for people to own some gold and silver in their portfolio, because it is wealth that is simultaneously no one else's liability, that the biggest money in the world has been buying for years, and now the biggest and most well-informed institutional traders in the United States are doing it too. And who they are is another issue. Who is it? Why are we not hearing these massive deliveries that are just literally record-breaking, it seemingly every month? No one's talking about it. That in and of itself, another contrarian indicator. And these are the people who spend billions of dollars. They do not do these things just for the hell of it. My guess is they understand where we are going, whether they have the roadmap to it or have been, cued into the roadmap. I think you do what the biggest money in the world is doing. Stop listening to the Jim Cramers and stop listening to your advisor and trust your gut. In the end, I think you'll be glad you did. And instead of jumping in with both feet, as someone silly enough like myself may do, I would say cost average your way through, and you'll end up smoothing out that uncertainty curve, since really none of us have a crystal ball, at least any that work. And do a little bit of research like you do, like I do, like your dad does, like anyone who's on YouTube does. And if you do enough research, you come to the same conclusion we all have, that Really, it's silly to not own any. In fact, you look at things, the world very differently. Like, you put all your money in stocks and bonds? Really? Most people would say the same thing about us. That'll change, and I think we're on the cusp of that kind of sea change. So, anyways, not to wax poetic so much, but I don't know how you can get people to see that this is not just for the sky falling.
Well, I mean, it's physical demand coming into the COMEX, coming out of London, coming out of Switzerland. The demand is off the charts. The lease rate in London, which is typically 0.5%, rarely gets above 1 or 1.5%, even in times of stress, and then it would typically only be for a short period of time. The lease rate is the rate at which it would cost to borrow bars to short or to cover a position, is as high as between 5 and 6.5%. And that's an anomaly, to say the least. It signals great tightness inside of the market at the highest of levels. The amount of silver that's coming into the COMEX is off the charts. From a technical formation, you have a 45-year cup and handle that might be as powerful of a formation as you will ever find in technical analysis, especially one that is mature as silver. 45 years, and the way that it works is the beginning of the cup would have been 1980 at $50, and then it goes down to the bottom, the shape of like a bowl or a cup, to $4 or thereabouts in the early 90s, and starts to come back up to 2011, almost to the top of the cup, doesn't preach it, comes down in consolidation for the handle, and here we are at basically $44, very close to moving back up. Now, the way that works is once you breach that level, the top of the lip of the cup, the $50 level, first of all, there is no resistance at all. But the way technical charting would work is that you take the difference between the top of the cup and the bottom, which is approximately from 50 to 4, about $46. You would add it onto the top, and your next target upside would be $96, $96 to $100. Is that crazy? No, it's not. I mean, triple-digit silver is something one could expect at some point. And then when you realize that the government reclassified silver now as a critical element, a critical mineral, they've put a floor under the price of silver. And so I think, all of the talk over the last 6-7 months, and I said no from the get-go, this is not about tariffs, never was. It was a ruse to bring it all back. This is reshoring. This is understanding that the biggest money in the world understands the significance of things like silver. The biggest traders here in the United States, the institutional traders, when they start to pay attention, when they start to accumulate, we should all pay attention. We've been talking about this on a central bank level for a few years now, about the deliveries into COMEX for a few years now, about the accumulation by India, by Russia, by Saudi Arabia, by China. China flying around the world and buying doré when they're the second largest producer in the world, sending it back to China for refining. Why would the second largest producer of silver in the world find it necessary to fly to Latin America to buy concentrate and doré directly from a miner, pay double what the West will, ship it back for refining, if it were just this this rock that hasn't done anything forever? And I don't know, silver right now feels to me like gold did about a year ago, when it was right in the $2,100, $2,200 range, and it kept trying to break out and would, consolidate and try to break out, come down, consolidate, in a long period of consolidation, and then broke through, and it hasn't looked back. I would say that's about where silver is right now. I look at it as the most undervalued asset in the world, and now evidently the United States finds it significant enough to call it critical. I think there are very few opportunities asymmetrically where you have such low downside and such high upside, being asymmetrical. For an asset like this, it's once a generation. So I think the drivers are big money waking up. Now, you could argue that the public is not even part of this rally yet. What happens when they collectively wake up? This is being driven by people at the highest of levels before the public catches on, which is another contrarian indicator. So, yeah, I think what's driving gold and silver is that silver is finally catching up. Gold is being rewoven into the monetary fabric of the globe. And thankfully, someone in this administration, I think, grabbed President Trump and said, if we don't do this, we will forever regret it. This is our last opportunity to bring some of this home, because the world is moving away from treasuries